Hello and welcome to another episode of Casual Friday, brought to you by the FTX app. Make sure to check them out in the links available in the description below. Spot trading, portfolio tracking, number is up as we're recording this. It might be worth looking at your portfolio before things change, as we've been in that type of market. But enjoy it while it's here, so to speak. Don, something very unusual is going on in the market. Bitcoin is
Mm.
up. It's
Oh yeah.
green and it's actually up more than ETH. Like I had to
Yes.
double take when I checked this morning. I'm like, is it an ETH BTC thing? Am I looking at the wrong chart? But no, Bitcoin, put in a pretty strong candle so far, and ETH BTC is down 2-3%, and Bitcoin's up
Mhm.
like 7, which is like I think people, including myself, forgot that Bitcoin can and does go up. it's just it's just been such a long time and such a chronic underperformer, just this entire way down and during this consolidation, etc. That it kind of just it's been a while basically, so this is definitely
Yes.
a breath of fresh air. Before the technical stuff, I mean, how do you feel about all this and where we're at?
I actually like this. The daily's starting to look really good. It looks like a fake out into like reclaim kind of situation. But
Hmm.
in general, right? You look at the weekly time frame, and the grand daily that we're talking about, like the oh Bitcoin is up. It's just barely a green candle, right? So it does call for a little bit of perspective.
It's got a good wick on it, Don.
But yeah, I do agree. And the thing is, like, this is something we've talked about the last week, right? It's support, right? It hit
Yeah.
support. And if you start shorting there, you're an idiot. And the people that have been shorting there are kind of getting what they're due, I guess. Because,
Right.
I mean, if you didn't expect like anything like this to happen, like a little bit of a bounce at least from the support, I think you're misguided at best. Especially given, and this is something that we've talked about as well, that the S&P hit weekly support, right? So like the support's been playing out, which is really nice. I don't really want to be too bullish into like weekly resistance. I don't know if you have the 20.4 to
Yeah, just adding it
21
now.
cluster, but on the weekly time frame,
That's
that
where
is
we're at.
resistance. And that's exactly where we're at. But honestly, if we reclaim that, it starts looking really good really fast. And I really like this momentum that we have today, that isn't necessarily caused by like Bitcoin's up 7%, the S&P is up 0.4, right? So the S&P is up over the last few days, and Bitcoin just basically shot back up with it, but more than the S&P so far. So I'm not hating it. I like it. I want to see more, and I want to see it close above. I have like a trend line going, like when you connect the 20th or like 19th of June, the
Oh, I
2nd
gotcha.
of July, and then like the 12th of July. If you connect that, I have like a trend line. I would like to for Bitcoin to reclaim it. That's like the first step on the lower time frames.
I've completely messed it up, but I'm sure they'll get the idea. Yeah.
Yeah. That's like on the lower time frames. And then obviously, like if we start coming back above 22.3 or something, like that area, that I'm sure you have clustered out as well, like
Yeah.
22 to 22.6K. If we reclaim that, then it starts looking really good, right? So until that happens, still no reason to be overly excited, but I really don't mind the chart right now. Obviously, still looks much worse than ETH. And what you said earlier with ETH not being up as much, it's basically like we have a squeeze going on Bitcoin. Usually, the altcoins don't necessarily follow one to one. But if you look at the chart, right, on the ETH chart, for example, ETH's just been front running it, right? The last 4 days, ETH's been strong against Bitcoin, especially so given how weak Bitcoin was. And today, it just like just kind of we lost 2 of the previous days, of advance on ETH BTC. So like I still think ETH BTC or like ETH USD is in the driver's seat. But it's good to see some action on Bitcoin because that's only gonna further that case, right? Because I'm bullish ETH, and if Bitcoin's gonna go up, I'm gonna be like, holy shit, that's a double. I'm gonna make some money on ETH USD just on Bitcoin going up, and then I'm very likely to make more money because ETH BTC is still bullish. So yeah.
Yeah, there's some developments in how the merge trade is looking in terms of some of the futures. some of the ETH futures that got really backwardated are starting to kind of normalize a little bit, and that basis is contracting as those hedges get closed, essentially. So that's always kind of also a trend worth keeping in mind. As far as Bitcoin technicals go, I agree that we're right into this weekly resistance thing, and it's also the midpoint of the daily range, right?
Yeah.
So if you go the highest close at 22.5, lowest close at 18.9, where that weekly cluster lands right in the middle of this like meaty range midpoint. So it's probably not the best place for like fresh positioning. But as you said, if you look at the consolidation that took place just before the breakdown, sort of between 19.5 and 20k basically on the daily time frame, you kind of want that to act as support now, right? Because if it's like a real reclaim, whenever you have these types of structures, which is impulse, consolidate, and then another impulse, if it reclaims that consolidation and blasts through it, you really want that to be your support, because otherwise, it just starts looking a bit shit. So there's like a nice intraday pivot, if you will, around that 20k handle. Also, I've seen a lot of speculation as to why Bitcoin is going up in this fashion, and people talking about open interest and a squeeze, a rotation. The real reason is because I tried to buy it and didn't get filled. Right?
Yeah.
So,
You told me, yeah. For the record, Trent actually like DM'd me. It was like, this is exactly where I want to buy it. This is like,
and I didn't get it.
This is
of
the
course
target.
not. Listen, whenever I get filled, the market just like disappears, and the second I don't get a fill, it's like teleport city. It's typical. But for me, the setup was, that daily range low that I've got, the lowest close 18th of June candle on the daily. You can see it closed below that on that scary engulfing on the 6th of September, and then the next day it closed above on the 7th of September. And that's a pattern that I like, the close below and then close above the next day. So I basically tried to buy any retest of the level itself the day following, and basically didn't get a fill. And then number go up. So no surprise there. It is into resistance now. I just think like in terms of short-term trading, if this is going to be some sort of high or low continuation structure, at the very least you want that. I mean, I'm on the H4 now. Just the pre-breakdown cluster between like 19.6 and 19.9. That's kind of got to be support. If not, the chart starts looking really bad again. I could still be convinced to do business at the daily range low, where I didn't get my fill at 18.9. But that's like less compelling for me, because in general, if I have a missed fill and it travels without me and I rebuy it soon after, that just doesn't tend to be a good trade.
No.
That's like one of my soft trading rules. So I guess TLDR on BTC, you've got a really short-term range in terms of like you've got weekly and daily resistance at like 26 to basically 21, which is being retested right now. If that forces a pullback, fine. That not fullback, it's not American football. That pullback has to hold around sort of 19.8 to 19.6, and if not, then again the chart just looks shitty and choppy, and this really starts looking like a squeeze, right? If it goes from the range low, flies into the range midpoint, and then just bleeds out and doesn't create or hold any support, that's like a rough looking chart. But I guess just take it one level at a time for the time being as far as BTC goes. It's at least nostalgic to see some strength from this thing. Like I'll take it. Like
a 10% day. Like it's not a 10% day yet, and might not ever become a 10% day, but like seeing like a 7% uptick on Bitcoin while everything else just like not is kind of nice to see. I like it.
Some nostalgia value there. Also, I guess rest in peace, Queen Elizabeth, good monarch. As far as royals go, she was a good one. So
rest in peace.
Quick commemoration there from our UK company.
True, actually, yeah.
Yeah, I know, right? But yeah, as far as Bitcoin goes, that's really it, right? Like the levels are clear. We're at this weekly daily midpoint. We know where the range low is. We know where the intra-day/intra-week pullback support is if the market's going to be strong. And the ultimate target, like, is this still the range high at 22.5, 23k, etc. So that's kind of Bitcoin. I think on the ETH front, we sort of covered a lot of it. As far as ETH structure, we're seeing that basis get contracted from a very kind of backwardated contracts into a bit more kind of reasonable structure, trading in line with spot, etc. as the merge shorts get sort of unwound. In terms of levels, we had a cluster in Technical Roundup on the daily time frame. Do you remember it? It's sort of the 1.5 to, well, the 1500s basically, right?
Yes.
Which is also the last time I took a trade. No, I'm joking. But that cluster ended up being very useful. I mean, I hate this level given just how much time we've spent here, but as far as levels in this area go, it's been really good. I know you've got like slightly different things going on. So for me on the daily time frame, what we're pushing into now is like my first level resistance is around 1700 or thereabouts. And I think we discussed this when analyzing whether we want to add this to the newsletter. For me,
Yeah.
it comes from the daily range from the 27th of May, that lowest close, and then the highest
Yeah.
close just a few days later on the 30th of May, right? You can kind of see it carved out like a really nice range where the levels work pretty well, where 1700 is your range low, 1800 essentially is your range midpoint, and then 2k is the range high. And it looks like right now, and you can actually cluster off, I don't know if you've got this, the 9th of August daily candle sort of as a potential level of resistance that aligns with the range low. So for me, that's sort of where ETH is pushing into. So for a more constructive ETH, kind of like Bitcoin, it's in an area of resistance. If it closes above, then it becomes a sort of, I guess, standard bread and butter range low reclaim, and you play it to the range midpoint and potentially the range high. But I think the prevailing theme right now, at least on the daily time frame, is that BTC and ETH are kind of pushing into daily/weekly resistance. Do you care at all about this 1700 handle, or are you like 2k or give me 2k or give me death type of vibe?
Yeah, I mean, give me 2.5k.
Okay.
The thing is, I look at this, right, and we've been rejected by it before. It's been like a very technical breakdown from that cluster that you just mentioned, like 1700 to like 1775.
Yeah, that's the one.
We broke that down to the downside, didn't act as support, and then acted as resistance and had a full-blown breakdown afterwards, right?
Yes.
And what we're doing right now is basically we reclaimed that entire breakdown. So for me, this is basically like an entire reclaim setup into like resistance, yes, but one that's been tested before and one that's been tested very, very recently. So I don't think 1700 is going to do much. I could be completely wrong here because, I mean, we've been just ranging in general on Bitcoin at least. But for me, it just looks like it wants to teleport up. So I'm still sitting in my ETH positions, not going to change a thing. Even though it's resistance, I'm expecting upside. And I mean, if you go from the higher time frames first, right, look at the monthly for a second. Like, look at that candle and how great it's shaping out. This is pretty much exactly what I wanted to see. Like, you have like a great monthly candle followed by one that gets people freaking the fuck out, and then you just keep on going along. Like, that is a look that I haven't seen in a while for ETH. I mean, it's been down only basically since the 1st December of 21. And now it's starting to look kind of good again, obviously because of a narrative shift and a new narrative in town anyway. But I still like the look of the chart. And the fact that it front ran weekly support as well in this kind of fashion, just to me looks like people are just, they really want to be allocated. And like for me, nothing's changed. I'm still bullish. I actually like it more now even than before. I think it's just going to go up.
Yeah, and I think it's a distinction worth making in your case that you're already well positioned. So the decision you have to make is not, do I want to open a fresh long here? It's, am I comfortable holding the position I've already got, which is up a lot, right?
Yeah.
And I think people forget that, for example, a level that you might want to take profit at is not the same as a level you want to short outrightly, right? Or like a level where you're happy keeping exposure is not one that you want to long outright. Like, all those types of, there's a difference between like analyzing structures from an existing trade management framework and analyzing them from a fresh positioning framework.
That I agree with, yeah.
And that's why good entries are good because they give you that sort of peace of mind, and you can sit through some churn, etc. If you have higher conviction, even if it doesn't look amazing in the short term, or the risk reward isn't immediately there. Like, your risk reward calculation is different because of your entry, essentially.
Yeah.
And I know some purists will get mad at that from like an evolving R point of view, but whatever. Cope plus Sieve plus pound sand, all that type of stuff.
The thing is, right, and this is something that I think a lot of people kind of forget, is that like with the evolving R, I really like that concept. But the thing is, if you have high conviction in a trade or in an idea or in anything, right, and you buy it and like you're like, okay, my first target is like 2.5k, and then maybe I'll actually keep it if it looks strong there, and it goes to 2k, right? This is like exactly my case, right? I bought 1k. I was like, I think it's gonna go to 2.5 ish, but if it's strong, I want to keep it. And if it then goes to 2k and it still looks good, right? I mean, yes, it did pull back from 2k, but like I'm not too worried about that pullback. I don't really need to close that position, right? Because maybe I'll hold the position till 3 or 4k. I don't necessarily think that's going to happen, but I want to see how kind of the price acts at 2k, at 2.5. And if I
At
closed,
5K, at 10K.
yeah, but I mean, the thing is, like, if I closed, would I get a position again? And for me, because I have very strict entry kind of criteria, there's a good chance that I wouldn't. There's a good
Yeah, that's a
chance that
good way
I'd
of
be
thinking
sitting
about
there.
it. Like the very fact that you have a position, so given your tight criteria, suggests that it's one probably worth holding or letting play
Yeah,
out at least, right?
yeah, exactly.
Yeah, that makes sense. I'm looking forward to what happens at this 1.7 thing. I'm
Hmm.
just happy the market has left this 1500s odd cluster that we had because like it was a good level as far as what was on offer, but it just wasn't my favorite type of area to do business, as I've said before on previous streams, etc. I really like 1700 to 2000, and I really like 1200 to 1000, but the sort of 1500s thing was so slow and grindy and choppy. So anything that gets us out of there and into nicer levels, I think is would be welcome on my side. As far as S&P macro indices stuff goes, I don't think there's anything terribly important to add. I mean, the TA on these things has just been absurd, to be completely
Yeah,
honest with you, which is
it's
so nice.
hilarious.
And I think it goes to something. This is something we've covered on the show. Sort of in a different way, sort of adjacent to this topic. Like when we spoke to when we've spoken to SBF, we've spoken to CMS, and on Twitter Spaces when I've spoken to Trabuco, the question we've always asked is what do a lot of these quantitative models do when everything breaks, right? Like when the market breaks and snaps in half, when your usual correlation, your usual bots of like, oh, if Bitcoin is up 1%, Uniswap is up 3%, those types of strategies. Like once all that goes out the window and shit is falling apart and no one knows what to do, what does it come back to? And a lot of the time, the answer is simply manual trading, right? Kind of like
Yeah.
old reliable, old agreed upon type of market wisdom, round number, levels, support, resistance. Those things really come to the forefront when more complex strategies essentially get carried out or are inapplicable to the market. And I think Jimmy Jude, this experienced sort of S&P 500 pit trader, he said the same thing about legacy markets. He was like, look, when shit hits the fan, we just kind of go back to our old school type of things, so things that used to work, and rough trading ideas where there's consensus. And I still think we're very much in that type of market regime where people don't know how to price anything and a lot of
Yep.
the normal strategies just haven't been paying dividends, and that's why I think more than ever before, TA, like basic support resistance high time frame TA, has been working just like really really well, and the market's become like more technical as liquidity has dried up, I guess is one way of putting it.
Hmm.
And to that point, this S&P weekly level that we've banged on about for, I think it's been months at this point, right? Because we talked about
Yep.
it when it was like the breakdown from it. We've talked about it when it was resistance. We talked about it when it was support as well. So that's bouncing from 3900s on the S&P, and the upside for that is roughly about 41, 4200s. And then you've got the cluster to the left. I'm just using the highest close from the week of the 23rd of May, whatever. It's the same type of area.
Yeah.
So there's still room there as far as supporting. And the same on
Hmm.
the NASDAQ. I think this one's really clean. That monthly cluster of support between basically 11.1 and 12.1, that's doing a really good job. And on the daily time frame, you saw a bit of a failed breakdown on the 6th of September. And look how technical this is again, right? The next day, trades below previous day's low, fully engulfs it, and then yesterday taps it as support and closes up. I mean, that's about as technical as it gets, right?
Yep.
And so we talked about having this as confluence. To have these indices at high time frame support and closing above it, and that still seems to be on the table. I think as far as other relevant macro stuff goes, the other thing that's on my calendar is there's this CPI data basically around the same time as the merge. So depending on what type of numbers we get there, I think that's going to be the next kind of high time frame catalyst that we get, because it's I think quiet for some time after that, and the market is still quite volatile and sensitive to these numbers. I don't think that's going to be the case forever. As you and I have discussed, at a certain point you kind of become desensitized to it, and the market just starts to care less and less about the volatility impact of the same news over and over again, even if it's slightly different numbers, just kind of trends down over time, right?
Yes.
And I think we're in the kind of personally, I think we're in the sunset period of that, where we've already had kind of likely had peak volatility from Fed speak announcements, and it's kind of it's still important and still sets the course, but I think over time, at least when it comes to short-term stuff, the market's going to become slightly more cynical and/or agnostic as to like the very specific numbers and the impact that those numbers have on price. I don't know what you think about any of that.
Yeah, I totally agree. I mean, I think in general, like the moment and the crypto market is going to notice at some point that it's very tiny in comparison to like a lot of other markets, especially now after the drop, right? At 60K, it's very different than at 20K. 60K, Bitcoin, and then the like ETH at 5K, that's like quite a big market already. But we went down like a shitload, right? I mean, Bitcoin is still down 70% from the highs. So now the market is kind of tiny, and once like the market realizes, holy shit, like we are all trading the traditional markets basically, but we don't have to. You're gonna see like a break at some point. It's just I wouldn't want to speculate on when that's gonna be, but I'm sure it's going to happen. And then this is gonna be quite exciting, I think, because a lot of people are, and this is something that always happens when these kind of trends shift, right? Because I said I don't want to call the end of it, but whenever the trend shifts, you're gonna see a lot of people unwilling to even consider that there's an end to that trend, and then you're gonna see a bunch of people just try to basically like, I mean, you see like the S&P move down, and then they're gonna try to short Bitcoin,
It's like
or
my
like
Deribit sub account all over again.
yeah, yeah, and that's one to one going to happen. It happens every time. Like when these kind of things break, you get one big break, and if you're on the wrong side of that, that's tough luck, right? There's not much you can do about it other than not getting too overexposed into a late trend like that. But if you then continue to kind of try to fight it, that's where you like really lose. And I've seen so many people do it. It's kind of it's a psychological thing that always happens. It's a sight to behold every time. That's basically where almost all the Bitcoin runs come from, like or at least like a part of it. Like that's where they start. Basically, people being in denial of one thing or the other, and then it just keeps on running to liquidate them. If it's not like a bull market thing, these things retrace all of it again, right? So that's obviously a possibility. But these kind of squeezes can go on for much, much longer than you think. So I'm looking forward to that. I don't know if it's going to happen now, if it's going to happen in a month, or if it's going to happen in a year, but I'm 100% certain that it's going to happen. So that is something that you like if you're trading basically, and I have, right, and you have as well. Like we've been analyzing the S&P, and we're like, okay, the S&P is at support, so we're gonna like look for longs more than for shorts, basically. Like that's been an argument that we've made for months now. But I'm willing to throw that out the window the moment I see that it's changed. The reason why I feel so comfortable doing it at support rather than resistance is because I think when you have like Bitcoin at cycle lows, like at 20K, basically at the previous cycle high, it's easier to kind of play the support stuff than it is to play the resistance stuff concerning traditional markets spilling over into crypto.
Sure.
But yeah, even the resistance has worked wonders, right? If we talk about like the 4.3K S&P monthly resistance, that was like one of the better calls that we made. And I wasn't even here for it.
It's fine. I held down fort on that one. I think there was a video on the Technical Roundup channel, which is will an equities pullback rug Bitcoin or something, and it was this exact call. That's the thing. There's a certain irony here, Don, where people care most about macro more than ever before, but also the market's been more technical than ever before. Do you know what I mean? It's very strange because like you could get amazing signals in the past like few months purely looking at charts and like high time frame support and resistance.
That's what I've been doing,
yeah. So there's this like weird inverse correlation going on where technicals are up hella. Well, I guess it's like a straight like a regular correlation where it's despite the market becoming more technical more than ever before to like a large extent, especially in the legacy world, people also care about macroeconomic factors more than before. And let me tell you, most of our audience are very good at one and very unlikely to be good at the other. So I definitely know where my attention is skewed towards, especially when you get confluence on both. That's when you know you're in for something good. But I really don't think you're leaving too many genius insights on the table by looking at high time frame TA, because that's been just very reliable overall. I'm not one of those guys where like, oh look, there was an FBI secret raid on this facility and the price chart told you because there was a 4-hour divergence. Like I'm not one of those idiots who says that like every single piece of news is priced in and you just have to look at liquidity or something. Like yes, there's insider trading and all that type of stuff, but I don't think it's as extreme or to that predictive and specific extent. I just think it's worth acknowledging that although understandably we are all kind of cognizant and concerned with macro, you're not missing out a ton of directional insights if you're just looking at high time frame technicals. That's a pretty good market to be in. Anything to add there. I mean, there's the whole Europe thing coming up, but honestly, I'm sure we'll see way more threads and analysis and fuel crisis and prices, all of that in the coming weeks. We can cover it
Yep.
then. The funny thing is, like, I've become so cynical. Like, every single bad macro thing is the next Lehman Brothers, you know? And that's what I've
Yes.
noticed. Like, anything that's remotely negative, it's like, you know, it's China credit, or it's Evergrande, or it's Europe in the winter, but like, everything is the new Lehman Brothers thing. And it's like, I don't know, we need new analogies. Like, get over it, guys.
Yeah, and none of them have buckled anything yet, which
Yeah.
is really interesting, right? People were like, Evergrande, that is going to take the entire world down.
Bro, that
Didn't
was
it?
so manic. Like, if you remember how crazy that was,
Yeah, that was
the
completely
actual, there was like
insane.
a mass hysteria around it. It was great.
Yeah, and I mean, I get it, right? It is a big deal, but for some reason, this whole thing that we have, that this whole world is more resilient than you'd think. And I think that's always going to be the case. Like the kind of doomer attitude is not going to do you too well in the long run, right? Like you're obviously going to have like a bunch of doomers be right eventually at some point, because if you're dooming for long enough, at some point it's going to doom for a little bit. But it's
It's like Peter Schiff's called 20 of the last two recessions or whatever that joke is, right?
yeah, and then during those, gold didn't even go up.
I know, it's so sad. But thing is with the
Uh,
doomers, right? Even if they're right, a lot of the time they don't make money on it, right? Because
yes.
they're either not short, and or they don't buy back when it's cheap and stay doomer. So you know, even if they end up being correct, quote unquote, it's one of those. It's like the old CMS thing. Do you want to be right or do you want to make money? If they are
Mhm.
right once every whatever period, a lot of the time it doesn't manifest into useful trading ideas. And some ape that just buys stuff mid-cycle massively outperforms them. You know.
Yeah, I mean,
So
there's people that went from $1,000 to like 10 million in the last crypto bull market, and then you have like people celebrating these like giga bears that have been shorting since 10K all the way to 60K and are now like almost back over water again. Yeah,
we do
I think
fetishize some weird people in this space.
yeah, it is kind of wild. And for some, I mean, I get it, right? People want to be like, and I mean, I've been like a very public bear at basically where my Twitter profile comes from, right? Like I like gained my audience basically by being like a perma bear from like all the way down from 19K all the way down to like 6 back in 2018. But the cult following that comes with it, like when you're bearish, is very, very odd. Because the thing is, right, like if I just sold and left and then rebought the bottom, or like even close to it, and was not as cynical as I was because I was like in that bear market mentality, I would have probably made the same amount of money without the stress, like
Oh
maybe a little
yeah.
bit less, but not much. And I was right. Like I was right on the bearishness and I was right on flipping, right? But I was still cynical. So I like took profits early and all that kind of stuff. And just being bearish in general just doesn't pay you as well as it does if you're bullish, right? Being right, a right bear is gonna make you some money. Being right and bullish is gonna make you a shitload of money.
Yeah.
So
And the
um
thing is that cynicism doesn't come for free, right? It carries over into your next cycle's trading and it fucks with you. Like if
yeah,
you look at a lot of
exactly.
our fellow class of 2017 type of people, the reason a lot of us like underperformed relative to some of our newer peers in this uptrend, I mean, we probably kept more of the money, so it's it's like a wash maybe. But as far
Yeah.
as when the market was different, the reason a lot of us struggled to catch on to a lot of these trends was because we have this BitMEX 2018, 2019 PTSD where no breakout was real, right?
Yes.
Everything was a BART. There was one volatility event per day. You don't buy breakouts and nothing really sticks. The idea of a trend was like offensive. Oh, it's up so much, it's going to retrace the whole move. Like all of those kind of cynical views on the market that were ingrained in us from the trading period where we sort of cut our teeth. That kind of costs you in future cycles. And as I've said
Mhm.
before, my personal view is that the next cycle's kind of PTSD is people going to be too attached to macro, too attached to Bloomberg headlines, and people who just think of themselves as like savvy investors when they should just really kind of lower their IQ if crypto's in an uptrend. I really
Yeah.
think those people are going to struggle personally. And I just hope I'm not one of them.
Yep.
Don, should we do some news? Do you have any other stuff to add? I think that was fairly decent.
Um,
Atom, do you want to talk about some
I
shitcoins?
mean, I can talk about Adam because it's up and I have a position. So,
What chart
um,
do you want?
so if you put on the weekly, right?
BTC,
Uh,
presumably.
no, Atom USD
Oh
actually.
wow, who are you? Okay.
Yeah, it's all there. But yeah, there's like a really good support level at 10. I saw it retest that, and I was like, holy shit, this is where I should have bought. Like I saw that it retested it basically when I came back from my vacation, right? I was like, this is what I wanted to buy, and I didn't get it, so I was waiting for an entry. And then, like when Bitcoin did its thing, I mean, we were chatting about it while I was actually buying it. So you remember, but while Bitcoin was doing its thing, like going to zero, basically, I just looked at Atom USD, and it had this like weekly candle red, or like even if you look on the daily, you had like two red dailies. So I'm like, okay, this seems like the last place to buy it before it goes to the moon. Because the next resistance in my eyes was like 22. So like it had retested 10, it bounced a little, and then you got like a red candle that retested the 11.6 support, basically the shelf that we built on the first move up, right? And I was like, okay, this is what I want to be buying. I did. And
Wow, it
it's
must be
been,
nice to get orders filled, Don. What's
yeah,
that like?
I mean, I didn't get orders filled. I mean, I did get like some orders filled, and I market bought the rest.
Oh,
So,
I mean, I can see
on
that.
I on like all the exchanges, actually. Like I had like money on like a couple exchanges, and I was like, this is all like, I pushed my entire Solana stack into it.
Wow, that's a pretty hefty redeploy, huh?
Yeah, I was like, I should like, I think people are stupid right now. Bitcoin looks shit, but it doesn't look as shit to be selling like good setups like this. So I was just like, okay, I'm just gonna push money into it. I actually bought some like when we were writing, and I bought some more the next day. So yeah, it's been kind of nice on that front. I think the BTC pair is pretty, just looks really really strong, right? When you go to the BTC pair and it's arranged like this, it's just taking off vertically, not giving anyone an entry. Usually, I want to be involved if I get any kind of setup on the USD pair, and I've got the setup. So I pulled the trigger, and it's been up only since. I'm actually surprised how up only it has been. Like I bought, and it's like the next day it was up like 10%, and then it was 10% again. I think I'm up like 25 or something from
Nice.
my buys.
$25, right? Total
Hey,
P&L.
yep.
Nice.
Ob- Obviously, can buy like a meal or two. Big deal. But no, it's pretty nice. I love when I buy, when I look at a chart, I'm like, okay, this is the last opportunity to buy it before it goes vertical. I buy it and it actually goes vertical, because then there's a good chance that you're actually right? Because if you buy and you're like, okay, this is gonna go vertical, and it just doesn't do shit, you're usually wrong and you get completely fucked.
Yeah, if you have an expectation of momentum and that expectation fails, you're probably the top, right? Like, it's a
Yes.
very binary outcome with those types of setups. You're either very right quickly or you're fucked, which makes them good
Like,
setups because you have a good invalidation both time-wise and price-wise. Definitely worth
yeah.
taking. See, the difference
Uh,
is, Don, I'm slaving away on Microsoft Word writing technical roundup. You're too busy buying the Atom Pico bottom. We are not the same.
oh no.
That is a setup we shared there. Go to trletter.com, get our newsletter. It's free. It's all that good stuff. And, we sometimes share stuff in there that's not completely terrible.
Yeah, and I
Usually
mean,
Don's ideas.
sometimes
I
I
mean,
think
we're
it's
very
pretty.
very cynical about it. I'm like, we do the whole TA thing, and at the end, I just write Don likes the chart. This is all window dressing. I also want to ask about ETH BTC quickly because we sort of
Yeah.
skirted over it. I'm looking at the weekly time frame right now, specifically the high of the 10th of May, that mega rally. Is there any
Hmm.
world in which like this is just resistance and it goes down like 20% from here, 30% from here, or something like that? Because I know that your sort
Um,
of base case is a higher time frame breakout, and failed range low breakdown into a range high breakout, which is like the most bullish way a range can resolve. But like I've
yeah.
just drawn the wick from the top of that rally, and that seems to be where some of the slowdown is coming. It obviously hasn't hit like the macro range high that we've talked about, closer to like point 0.1. But do you see this as a plausible pullback level, or
Yeah. I mean, I think it's plausible as a pullback level, but I'm just gonna ignore it.
okay?
I, mean,
I think that says it all. Honestly, that says it
I,
all.
like
Not in a
I
bad way. It's just like reflection of what you think and positioning,
yeah,
etc. So
like I legitimately think it's a really good level, and I mean, there's obviously some action around it. Um, but like with some positions of mine, right, and I have this from time to time. Like I'm like, oh yeah, there's a bearish thing, but like my conviction is like way too high to take any like any consideration, because if I did every time, like there's a good level or something, and then I changed my entire thesis, I'd never hold on to stuff long. And for me, like when I see like the chart shape up, or in general something shape up to make me big money, right? Tend to hold on. I try to tend to hold on longer, and ignore like the little bit negative things. I'd much rather see ETH go to, like, if it goes back to 1.4k, 1.3k at this point, I think we'd be in big trouble, right?
Gotcha.
Then I'd give back a shitload of the gains I've made, because my average is like 1k. I start selling at like 1.3, 1.4. That's like 50% of the gains that I've made just gone, right? But I'm more than willing to pay that for the upside that I think we could have.
Yeah, I think it's an important distinction. Like, at a certain point in high time frame swing trading, if you're gonna go for big plays, there are levels you just have to ignore, right? Or
Yes.
if you want to be more technical about it, like, you need to be more selective with what your first trouble area is. Because if you take the extreme example, like, you buy, I don't know, 18k BTC, and you have to choose a level of resistance. Well, I'm sure there's some resistance at, like, on lower time frames at like 18.5, right? Or even 19k. But
Yeah.
your trading strategy becomes just simply not viable if you're buying these high time frame levels with conviction, etc., and then you just puke them at every single tiny intraday resistance, right? So at a certain
Yes.
point, you just need to make a decision, like, what structure is important enough and worth it for me to hold into, and which ones do I ignore? And then there's always like a balancing act there. So, if you're like in an uptrend, your targets are going to be wider and your holding periods are wider, or if your conviction is higher, you're going to want more. If you're in shitty liquidity conditions and buying less compelling lower time frame levels, then what qualifies as a trouble area, that standard is lower, right? So it's simply a question of what is a trouble area and what it's based on, and that tends to be wider if your conviction is high and you're trading at like extremes and high time frame levels and so on. But at a certain point, like, it's crunch time. You've got to ignore stuff if you're going to have a swing trade by
Yeah.
definition. News, shall we?
Yes, let's.
Blitz through some of these headlines. Binance to end support for USDC. Two other
Mm-hmm.
stablecoins in further of its own BUSD. This is very cavalier, but I don't hate it, to be honest. The stablecoin market is like incredibly competitive and incredibly lucrative, and Binance is like the biggest exchange in the world. And also their BUSD is, it's like a white labeled Paxos product, and they're pretty legit in terms of sort of audits, transparency, the treasuries they hold, their portfolio, etc. So I don't see this as a huge issue, especially because they're sort of centralizing the liquidity around it as well. It's very interesting because they didn't choose to do it with Tether, and I think it's just so much of like current perps and futures infrastructure is based on like the USDT pairs, and I think there's also a logistical issue to do with converting Tether comes with a fee, and that will be like very expensive if my understanding is correct. So there are some, there is some friction around that, but overall, Binance kind of as the biggest exchange in the world, eyeing up the stablecoin market is not unexpected. And I think if
Yes.
any exchange is going to take a proper swing for it, I don't mind them doing it, especially with their current size and the liquidity available there, etc. I mean, you could argue it's more centralization, etc. Sure, but it's just commercially in their interests to do this. So I'm not terribly surprised. And as long as again liquidity isn't adversely affected, etc., it seems like a pretty smooth conversion process. I haven't seen any issues yet. This is kind of par for the course, I think.
Yeah. I mean, kind of, I saw it, because I mean, Binance just has like these big headers, I guess, that tell you that that's the case. If you own anything, any kind of like the stable coins, the stable coins that like they're going to convert. And I was like, okay, yeah, that makes sense. And I think they're gonna, like you said, they're gonna have like a big market share, obviously. I saw Hosaka make a tweet about how long people would think it will overtake, like Binance, Binance Tether. What is it called? I forgot.
BUSD, yeah.
BUSD, but yeah, what's the actual name? I forgot.
I think it's just Binance USD, no?
Yeah, very likely. But anyway,
Babe, new dollar just dropped.
yeah, but the thing is, he asked like how long do you think it's gonna take for them to be like one of the bigger or like the biggest one, and he had like I think 6 months, 12 months, 24 months, and then some filter, and I could see this legitimately be the case that they overtake the entire stablecoin market in like 12 to 24 months. I'd be not surprised at all. So that's going to be an interesting one to kind of watch.
I think
I do
especially
agree.
at this point in the market, right, when it's just on-chain activity is lower and the market is smaller, if you're going to make a type of capture play and try to corner it, you might as well do it now, right?
Yeah,
When everything's
exactly.
just
It's
tighter and
easier
tighter.
right now.
Yeah.
Yeah.
Cool. So that's something to look out for. I wonder if we'll see a day where kind of Tether perp dominance runs out. We already see it being threatened by like a lot of, for example, FTX perps, just using a generic USD basket, and people are fine with that. Binance is obviously the big one with USDT perps. I wouldn't be surprised if that sort of shifted over time. But you and I have overseen a crazy amount of market structure changes in crypto, so nothing would surprise me at this point. This is my favorite one. Well, not my favorite one. This is just one I like talking shit about. Miston Labs, creator of the Sui blockchain, closes $300 million raise led by FTX Ventures. Their Series B gives them the company a valuation over $2 billion. This is the startup founded by all those Meta executives. I think they tried to launch the DM thing, and this is for the Sui blockchain. Miston is the creator of Sui, a yet-to-launch proof-of-stake Layer 1 blockchain that is built to mount a challenge to the likes of Ethereum and Solana. Don, we're doing it again. The Layer 1 carousel, the most... and it's all the same names investing into it, right? You've got, like, I think...
obviously.
Yeah. Jump, FTX Ventures. I'm surprised I don't see Multicoin in here. That would be quite... shocking. A16Z because they fund everything, right? And all the usual suspects, so to speak. Now, we've ranted about this like an infinite amount, but basically the way it works is you get a large amount of demand in crypto. People start speculating, especially on DeFi, NFTs, and Ethereum based applications. Ethereum scaling has been like super slow, so as a result, the demand for block space becomes outsized and the block space supply can't keep up. As a result of that, the cost of transacting and interacting on Ethereum smart contracts via the base layer becomes exorbitantly high. Normies get priced out, retail gets priced out. In general, like everything, the blockchain becomes largely unusable for normal use cases, and people start complaining like, "Oh, this is so slow, this is so expensive, this isn't fit for purpose or built for purpose, etc." And then voila, in comes a new layer 1, which promises to be faster, more decentralized, and suitable for retail, etc. And it's got all this hype because of its like opportune timing when people are priced out as a result of Ethereum's base layer being too expensive, and you have all this fresh funding and fresh narratives. You've got a fresh chart, etc. It goes up a lot, and then eventually, when the market dies, which it inevitably does every single cycle, the blockchain becomes a fucking ghost town, right? Like if you saw gas fees like on the way down and during a lot of the chop, it was like close to zero, like transacting on ETH became completely free, basically. And a lot of these new layer 1s that were, that existed to solve a problem, they're solving a problem that only exists at the pico top of the market cycle, right? Like I think that's probably the most specific way of putting it. The demand for these things is at its highest when the likelihood of the market like going to zero is also at its highest, if you want to be like really cynical about it. And we saw that with Solana. We're going to see it with a ton of other layer 1s. And so, people, after a certain point, after a chart has had its market cycle and played out, you want something new, right? You want fresh money, you want fresh investors, you want fresh narratives, you want a fresh price chart. You don't want bag holders who are getting unlocked selling every pump. You basically take the same game that we've described and you run it back with another layer 1, which is basically supposed to do the same thing. Now, I'm sure someone's going to come in and give like a very technical distinction. No, this time it's different, etc. But we've seen a lot of this kind of Ethereum killer layer 1 narratives play out, and it's pretty much always the same cycle. Like ETH gets expensive, something new comes up, that thing moons on its own and moons against ETH, then the entire market dies, that thing dies on its own and also underperforms ETH, and then by the time the market recovers, there's a new toy in town. Over and over and over again. The only potential exception I'm thinking is if Ethereum's kind of scaling solutions actually become widely used, like Arbitrum, etc., Optimism, in time for the next cycle, it's going to be much harder for that narrative to take shape if ETH stays affordable, right? Because I really think that the use case for these things has been the inaffordability of ETH, and that sort of really drives the point home. But then if ETH stays relatively affordable, at least compared to past cycles, then you have to compete with ETH like on its own terms, and I don't think these new layer ones. I mean, that's a much taller order given just how much of a network effect ETH has. That's kind of the only proviso that maybe this time is different and we don't fall for the cynical ploy of the Ethereum killer, but we probably will. And it's nice to see that the playbook is still alive. Sorry, that was very ranty, but what do you think about this?
No, I one-to-one agree. Like I don't think I have anything to add. It's the exact same what you said. It always comes back to like people see how well ETH does and they want to do the same, and then ETH like starts clogging up because the cycle is just hot, and then the layer ones take off, and until people realize, wait, this was just like a thing because everything's too hot right now. Something that I want to talk about because I just have it open. Just look at the Atom chart for a second.
Oh gosh.
Oh, I love it.
We're not even live. Why is it going up? Oh my god, that's jeez.
That's a candle.
Wow.
Oh, that is kind of nice.
Has it hit any of your sell orders yet? No, of course.
Actually, no, I don't think so. I mean, 2020 is where it starts, I think, roughly. I want to dox it and have like people fucking front run me again.
Yeah. Dogecoin 2.0.
Yeah, but on the selling part, I don't mind it too much. On the buying part, I might mind it more.
Yeah, of course. So. Well, good for you, and good for our newsletter, and bad for me, because the one trade I did try to take didn't get it filled, didn't buy Atom, and whatever, I hate this. Let's go back to news so I don't have to look at this chart. Good for you.
Sorry about that.
Leave a like on the video to pity me, basically. So that's the layer 1 trade. I'm still going to trade the shit out of this thing, because I love a new chart, and I love a fresh narrative. But, yeah, this is just a feature of every market cycle worth bearing in mind. GameStop announces FTX partnership. FTX US and GameStop announced a new partnership on Wednesday. GameStop will carry FTX gift cards in some stores as part of the partnership. I'm sure there's more stuff coming up in terms of what this means. Like, I hope it's not just gift cards. It does say plan to collaborate on new e-commerce and online marketing initiatives and customers to FTX's community. Yeah, the partnership is aimed at introducing more of GameStop customers to FTX, basically. Yeah. I don't know, is what I'm going to lead with. I don't know. Like, for me, it's going to take some time for the retail trading bubble to come up or return to the same fervor that it did, like, basically during the pandemic period. I think it's down a lot in that regard. It's not washed out or wiped out by any means. So this is clearly a kind of targeted. They're targeting a very particular contingent. Because if there are kind of apes or like retail investors from that cycle still alive, they're probably still hanging around GME waiting for the mother of all short squeezes, whatever that means, right? So it's like seems to be like a very targeted type of partnership. But like cynically on its face, it does seem at an odd point in the market cycle to do that, and also just like a bit gimmicky, to be honest. It's just like sort of big name GameStop. They know there's a very fervent community there, so it makes sense to target them, but. This isn't some big ticket inflows type of thing. It's just, I think, going after some retail apes, hoping they come to crypto and not just hold the same stock. What do you think?
Yeah, I mean, I'm not on board with the whole Jimmy thing in general. Like, you cannot excite me with it. I still think it's probably going to be in this kind of weird state where it goes back and forth between like prices. Like it went from like 20 to 40 to 20 to 40 like in the last few weeks. And I think that entire hype is going to die down.
Has that been the vol?
I'm not. Yeah, I mean, it's been like not in last, like it's every other time, like it goes from 20 to 40 to 20 to 40. Before that, it went from 40 to 80, 40 to 80. It does like these things like a couple times. So I think there's like a trade there if you want to take it in general. I wouldn't want to take this same 20 to 40 trade again. But like in general, you can see the hype cycle of this thing in the chart. Yeah, right? But you can see the hype cycle in this chart. And I think it translates really well. I think this is gonna take a few years. But I think it's gonna be dying. So like whenever I see Sam do, or like in general, like FTX do something with a coin or with like anything, right? I'm like, okay, there has to be a trade there. That's why they're taking the angle. So like there might be a trade there, but
I guess it's really also just like low-hanging fruit in terms of trying to poke at the kind of retail investor ape base. Like GameStop being the household name at this point, you kind of just partner with them when you get them, you get the word FTX in their mouth, and hopefully that pays some sort of dividends.
Yeah, I mean, I don't know if you've seen the Reddit of like the like
Unfortunately, every time I'm looking for One
yes.
Piece spoilers on the front page of Reddit, I do see like Super Stonk and all these other.
Yes,
Yeah.
exactly. And if you just as much as post something positive or something conspiracy like, you will get like a bunch of people to like you, and a
Yes.
lot of companies have taken advantage of it. It makes sense. I am not hating. If I was the head of a company, I'd probably do it too. Like you said, it's low hanging fruit. You
And
basically
they're
have a
very
bunch.
gullible, so.
Yeah, I was about to say you have a bunch of morons basically that will worship
Oh
you
gosh.
if you oh, I'm gonna get killed for this, but
Yeah, yeah, it's over.
um that will worship you if you just say something that you like may believe, may not believe. It doesn't really matter. You just have to say something, and then they're gonna be like, it's the same with the Elon Musk crowd, right?
Yes.
He was
Can
like
do no
it
wrong.
yeah, he can do no wrong, and it's the same thing if you do if you do something positive for GME, you're gonna have the same kind of gullible crowd follow you, which makes sense. You want to have that if you're running a company, because what's there not to like about like a cult following if you want to build something big, right? If you don't,
Yes.
so like for example, like if I had a cult following like that, I'd fucking delete my Twitter. I could not deal with it. It's stupid. I would not want to. But if I wanted to make something big happen, I mean, those are the people you want to have,
For
right?
sure. And also, they're an exchange, and these are bad traders. That's a match made in heaven.
That's
Like,
actually very valid. Yeah.
so yeah, that's that on the GameStop. I certainly won't be buying any gift cards anytime soon, but
No.
here we are. Crypto Terra Luna Classic surges as traders speculate on new supply burn rule. So they basically turned Luna Classic into like a safe moon type of thing, where
Oh
there's like
yeah.
a destroy
You
1.2% of every transaction to reduce supply, even though it's not going to be supported on sexes, obviously, as in centralized exchanges for you perverts out there. And I think at one point, I'm not sure if it's the case now, this Luna Classic had a higher market cap than Cosmos, your bag. Maybe that last candle changed it a little bit. But yeah, this doesn't feel like bottomy things,
no,
first
no,
and
no, no.
foremost. So that's very rough. But I do think, because crypto's such an absolute clown show, Don, I can definitely see a world where, like, next cycle, like Luna slash Do Kwon slash the Terra ecosystem just goes ballistic again.
Oh yeah,
And
yeah.
people are completely ignorant of like history and the extent of the fallout, and they just get sucked in by the memes and don't care about the past. And this is something that kicks off once again. Like maybe not to the same magnitude, given hopefully the funds and the so-called smart investors who got blown up don't touch it with as much size. But as far as
Maybe
like
even more.
retail frenzy stuff goes, I think that I can definitely see a Do Kwon TFL type of comeback. Unfortunately, that's just
I
how
do
this
agree.
shit space works in many times.
The thing is, like, if he doesn't go to jail, I just think he's gonna come up with something again,
Yeah, of
Ponzi
course.
like ish. I mean, I'm not saying he will. I'm not saying, but I could see it. I'd be very surprised if he didn't. And like when you do something like this, right, and it catastrophically blows up, and you're like, oh shit, and then people still celebrate you, and you're like, what the fuck? I can do anything, really? I could see that be like a thing where he's just gonna do something new or the same thing again.
Yeah. And
Wouldn't
people
be
say this time it's
surprised.
different. He learned
Yeah,
from Luna. It's just because number go up. The amount of like mental gymnastics people are willing to perform for bad actors in crypto just because token price go up, there's no limit to it. So that's
yeah.
something worth breaking. But the funny thing about this article, first of all, Don, it says the rate cannot be enforced on trading the token on centralized exchanges, as we said. So great. But this one's funny, and this is like completely off topic, but I just found it entertaining. From the article, Howard Greenberg, cryptocurrency educator at Prosper Trading Academy, and God bless him, I'm sure he's a fine guy, but this is just a classic crypto educator thing. This is a total speculation play and basically turns LUNC into a meme coin at this point, just like just about everything in crypto. And then this is like my favorite, most trading educator phrase ever. It will be a very volatile trade, and if someone chooses to enter the trade, I would make sure you have an exit plan for both downside and upside. Come on, man. What are we doing here? Actually, this is like completely off topic rant. I think it's one of the worst developments that we've had in terms of the crypto Twitter meta, where you essentially have all levels are equal. Every level should have a bullish plan and a bearish plan. You should always have like a bullish plan and a bearish plan for absolutely every single move in the market. I just don't think it's a realistic way to trade. And I kind of used to do that, and it's nice to think of invalidation. But the issue is, it assumes that at all points, a level is just as likely to be as support as it is resistance, right? Or at the very least, like a breakdown at that level is worth chasing just as much as a breakout on that level. It basically assumes this kind of trade symmetry that often simply doesn't exist. And it's just a way of like never being wrong or never looking wrong. But I think you know that like if you trade this kind of stuff actively, some levels you're just like, okay, I think this is really good resistance. And if it breaks, you don't go like, oh, I guess I'll buy it. A lot of the time you'll be like, nah, this is like a very good level. I'm not going to buy it. I'm going to wait for it to like deviate or fall back below the level, but I'm like short biased into this area, right? And the same goes for longs. I think that framework of like having a base assumption as to what's going to happen at a certain structure is much more useful on average than simply assuming every single level is made equal and then every single level can offer an equally valid long and short. I just think that's way too much noise and not like an accurate assessment contextually of what markets do.
I do agree.
I mean, I used to do that, but I just changed my mind because it just wasn't. I don't know. It's not how it works. Like some levels are only for selling. Do you know what I mean? At some points, you kind of can't justify being bullish or bearish. You kind of wait for an extension or whatever else. I don't know. This whole like 50-50 on top of 50-50 at every single level, I find it quite frustrating, and it sort of dilutes the value of any real analytical framework in my mind. But we'll trade whatever works for you. I just think at certain points it's worth having like at least a prevailing bias. And then acting on that, as opposed to saying, I don't know anything, maybe support, maybe resistance, maybe up, maybe down at every single level. Like, I think on average, you should try to have more effective filters for directional bias of the market more broadly.
I mean, it's an easy way to cop out basically, because I can give you the important levels and say it's either going to break up or down here, but that's completely useless, right?
You do that all the time, Don. No, I'm joking.
Like you can draw out 3 possibilities at 3 levels. And you will be right, because one of them is going to happen.
You'll be right,
But it's not really something that anyone can trade off of. And if you try to trade off of it, you're going to lose money in the end, even if you're quote unquote right, which you're not, because I mean, I can tell you like, I'm either going to win, lose, or nothing is going to happen. And you're going to be like, holy shit, he's right. That's basically what you're seeing in a lot of times. It's like, you cannot be wrong. It's impossible to be wrong if you're saying it's either going to go up, down, or sideways. And
at every single level on the chart.
At every single level on the chart. It's like,
you say so much, you're not saying anything at that point.
Exactly. So this is something that like I have a little bit of a pet peeve with, is that I see a lot of people demand that you kind of say it could go up, it could go down, that kind of thing. But like trading is really about like, you have conviction, you play the conviction. If you're wrong, you take that loss, right? It's not about preventing to be wrong. It's about like, you trade, and if you lose, you're like, okay, shit, well, I was wrong.
It's a cop-out, right? It's a cop-out because it assumes that if you're wrong, you'll just flip bias and you'll immediately be right. Do you know what I mean? It's just like not how it works. Like at a certain point, you just eat shit and you move on to the next trade. It's like, I think this is resistance, but if it flips it, then I'm wrong, but I'll still be right because then it's a support when I'll long it. It's like, no, you won't. Like, try actually doing that on a consistent basis, like going into 10 different levels thinking it could go up and it could go down at all of them. I don't know. Not for me.
It's just not going to happen.
I mean, trade whatever works for you, and I think it's very much worth. Sometimes you will get those types of scenarios. Like, let's say it's a range midpoint and there's no directional bias and it's blatantly a pivot. Like, it's definitely worth having a long and short scenario in the back of your mind. But I just think that taken to an extreme where every single level is equal and there's a long and short at every single level and there's no directional bias whatsoever, it just becomes really hard to trade because you're like trading every level and then taking profit at every single level, and I don't know, not my favorite. Moving on from that, the final the penultimate one we've got, and this is something we wrote about in the newsletter, or warned about to some extent. Again, trletter.com, it's free, so sign up. White House calls for crypto mining standards to minimize environmental impact. It's on this executive order stuff, and it's basically saying, energy crisis, and a lot of these cryptos are very energy intensive, and if they use a lot of electricity, which undermines US sustainability goals, if they can't go green /efficient /reduce their usage, we should basically do something about it. Should these measures prove ineffective at reducing the impacts, the administration should explore executive actions, and Congress might consider legislation to limit or eliminate the use of high energy intensity consensus mechanisms for crypto asset mining. So this is kind of what we warned about in terms of like an anti-Bitcoin narrative emerging from A, the energy crisis, and B, should Ethereum have a consistent a successful and stable proof of stake transition, that's like almost narratively and from a regulatory point of view, the worst case scenario for Bitcoin, right? Because then you just point to the energy crisis, you point to a network as large as ETH seamlessly transitioning to something more energy efficient, and you say, hey guys, what gives for this big orange coin, you know? So I think we'll honestly, especially if the doomer prognostications about energy prices and fuel crisis and the war in Ukraine, etc., gets worse throughout the winter and into next year, I really think we'll see more sort of ESG priests, if you will, and environmentalists push this angle a lot harder. And it's really Bitcoin that suffers most from it.
Yeah. I mean, that's true. I mean, the thing is, like, it's so easy to pin the blame on like a lot of the issues that we have on crypto, right? And when you then have a crypto like ETH that is like, okay, hey, we see the problems and we moved away from the problems because we want to do something good. That's a very powerful narrative to have, right? And then the eyes are on Bitcoin as the biggest one, being like, hey, what are you doing for it? And given that we have the most idiotic maxis on the planet, they're going to say something stupid and then it's going to look really bad. And yeah, it's a really funny narrative to kind of follow. Obviously not for like if you're like a Bitcoin maximalist, I think, because there's not a good angle. I think it's going to calm down eventually, like into next year. But yeah, it's going to be, this winter is going to be a lot of that, I think.
It's just so much confluence with the ETH merge and the fuel crisis, like a global one, that it's like a perfect storm for it, you know? But I mean, maybe if you want to be optimistic about it, if this forces, quote unquote forces or pressures Bitcoin miners to become more green and sustainable, which they are sort of becoming over time, maybe that's a net positive. So maybe we'll just have that effect and no one suffers. But I do expect more pressure. The final thing, and I haven't got this up on the screen, I've got the tweet on my phone. This is really funny. Novogratz, you know, the guy with the Luna tattoo, he retweeted this account called Business Famous, which has a screenshot of Pomp's profile. So Anthony Pompliano, quite a famous Bitcoin figure is one way to put it. He's got a screenshot of his profile, and the tweet says, "Laser eyes gone, Bitcoin and bio gone. Pretty soon he'll be tweeting about dividend stocks," you know, and his Pomp's bio says entrepreneur, investor, and lifelong learners. Like nothing crypto, nothing Bitcoin, no laser eyes, nothing. And so Novogratz was retweeting that account saying, "This is funny, come on Pomp, keep the faith." First of all, a man with a Luna tattoo using the term keep the faith is like comical on its own. But I also think it speaks to like a broader, like one of the things you have to remember about Pomp especially is like on the way up, and especially like at the Pico top, Pomp was one of those guys on his now defunct Bitcoin morning show. You remember that, right? He was legit doing like a Bitcoin show every single morning, which simply, I think he stopped doing it and he's doing podcasts now. I'm sure that's not related to the price whatsoever, right?
No, cannot be.
Can't be. So now that that's gone,
Yeah.
one of the things he was doing when it was still around is he was like shouting on his show and sending out these tweets. I've got one of them now from like October 10th, 2020. And I'm sure there are later ones as well, because I remember him doing it on his YouTube channel. It was this whole thing of like, at this point, you're violating your fiduciary duty if you invest capital on behalf of an institution and you have no exposure to Bitcoin. Your job is to find the best risk-adjusted returns, nothing better than Bitcoin. About time we all start saying it loudly so they listen. And this whole thing of like, oh, inflation is coming, and you're so irresponsible if there's like a money manager or treasury like a treasury manager, etc. If you don't buy Bitcoin to like fight against it and you're costing your shareholders dollars, etc. I wonder how that's gone. But it's just a broader theme of the cheerleaders always get louder on the way up, and then a lot of them just simply disappear when the market goes away. And that would be fine if they just like get fucked and they leave. Like I can respect that, right? Like you got caught with your pants down, you were wrong, and you were like loudly wrong, and you eat shit and you go away. That's fine. But the issue is, as you and I have seen from like the 2017 crew, a lot of these guys just go into like stealth mode and focus on other things while the market is down, and I guess grift elsewhere, for lack of a better term, although not necessarily applicable to Pomp, whatever. Don't sue me, it's Minecraft. Personal opinion, honestly held beliefs. go fuck yourself, all that type of stuff. But what happens is they go into, like, all of these Bitcoin people, they go into stealth mode when the number go down, and after the number's gone down, and their audience base is wrecked, and their engagement on Bitcoin is wrecked, and there's reputational damage associated with like talking about Bitcoin, etc. And then they just come back when the market goes up. They just come back. Trav was an example, and there's a ton of the Ask Me How to Short, etc. Like all these guys, they'll just like go away when they're super wrong. People sort of forget about them, and then when it's convenient, they'll just re-enter the public consciousness and start beating the drums of the same message that got them wrecked in the first place. So yeah, I mean, I'm not complaining about less pomp. And the thing is, I don't mind pomp. He's clearly a visionary. You remember his slogan in like 2017 was "The virus is spreading." So he was like well ahead of his time in terms of the pandemic and all that type of stuff. But I don't really have a point here, Don. I just find this whole thing really funny. It's just kind of the amount of fair weather Bitcoiners, even people who've been in the space for like 5-6 years and many cycles and seemingly don't learn anything, that they'll never stop being comical. Meanwhile, we're still out here in the trenches, you know, slugging 3-4 days a week, whatever, content, eat your heart out.
Yeah, the funny thing is, right, and this is something that I think you can kind of see every time there's a bear market around, the people that are very critical about it all, right? I mean, I think every time I buy something, I say it's like a scam, you shouldn't buy it, or like just make your own opinion on it. Those are the people that stay around and kind of like even through like the tough times.
Yes.
And then the people that are telling you to sell your house, sell your belongings, to buy Bitcoin at the Pico top, those people like get very, very quiet when the prices go down, right?
And they allegedly didn't pay their taxes either, or didn't report on them accurately, allegedly.
Yeah. And that's just something that I've noticed every single cycle, right? The people that are very critical and that are not afraid to kind of mention like the bad sides of it all. Those are the ones that stick around and actually support it as much as they can,
when it matters, right?
When it matters, exactly. And the others that kind of get into fights with exactly those people. And like Eric Wall, for example, is I think a good example because he's like,
Eric Wall.
Yeah, I love the guy, and he's like, he gets so much shit every single bull market for calling out like the bullshit that people spout, and then it goes into bear market and his enemies just disappear, right? And it is the same thing cycle after cycle after cycle.
IOTA, Chainlink, Hex.
Yeah. We had him on the show. We talked about this a little bit, like on the podcast. Stock to flow. Like he keeps on picking these things out that everyone knows is bullshit. I mean, we talked about stock to flow as well at length.
Oh my god.
And no one ever does like these like victory trips, right? Because everyone's dead when you could, right? Like these things exist, and you get shit for saying it's stupid, and then the bear market hits and everything goes down 80%. And then the people that called you out are just dead. They're not around anymore.
Well, that's what makes being a bulltard so convex and good to the upside, right? Because like you just beat the bullish drum. If you're right, there are more people, and you get a ton of engagement, and the people who were there when you were like beating the bullish drum all worship you. But if you're super wrong, everyone's dead anyway. So there's no, you know, the number of people who are gonna like dance on your grave is significantly lower. So the skew is towards being like a permabull, permanent optimist, on-chain fairy tale sci-fi writer. Because if you're right, you're really right, and if you're wrong, it doesn't really matter because you can always just like rebuild your reputation, rebrand, make it all back in one trade type of thing. And most of the people whom you wrecked aren't there to dance on your grave because they got wrecked themselves, and it's kind of embarrassing to admit. So they're not going to be the ones coming after. I think that's a point people forget. Like when you get wrecked on a scam, a lot of the time, instead of like calling out the thing that got you involved, there's like a huge amount of shame associated with that. So people just won't do it, you know? There'll be like a very private thing for them to deal with. So to a large extent, the normal feedback loop you would get that would be corrective towards your behavior simply doesn't exist. Cool. Any final bits and pieces? What's your weekend looking like? What are you looking at next week? Presumably just like Atom, trade management, Bitcoin, range midpoint, more merge stuff, usual culprits.
Yeah, so I'm going to keep holding ETH. I'm going to keep holding Atom towards like 22 if I can, depending on how today shapes out. Because like the pump that we've had just now basically took the BTC pair above range high on the Bitcoin pair.
Ooh.
And then obviously fell back below it because I mean that was like a short squeeze more than anything. But so I'm gonna keep on looking at that. But yeah, I'm not going to do too much. I'm good in the position that I have, not going to change them too much. And then go from there, I guess. See how Monday shapes up. And but yeah, I'm reasonably optimistic.
Like it. That sounds good. Not a ton, no positions to manage, unfortunately, given my missed fill this week around. I might poke at some of this stuff intraday. As we discussed, there's some pretty clear ranges to deal with on like BTC and ETH in terms of levels. I might do some more intraday trading as I have been in the last few weeks. I was discussing whether to talk about it like on the show, but because it's sort of hindsighty by definition, I'm not sure if it's terribly interesting. Like maybe I'll do it, but whatever. I'll let the audience decide. Leave us a comment. For now, though, that's all from us. Hope you have a wonderful weekend. As always, check out FTX, specifically the mobile trading app available in the description below. They've got all your spot trading, zero fees, convert from one coin to another, portfolio tracking, all the stuff you want. And also, hopefully soon, fingers crossed, we have a short and sweet leverage trading guide that we'll share that you can send to your friends to keep getting liquidated. Don and I kind of capitulated on writing the really long one, so we thought we'd write like a very accessible short one. So look out for that in the near future. That's all from us. Take care, have a great weekend, and I'll see you for Monday markets.
Bye bye.